Tax planning in Canada involves strategies and actions aimed at minimizing tax liabilities while complying with relevant tax laws. Here are a few key areas to consider for effective tax planning in Canada. 1. Income splitting. Determine if there are opportunities to shift income to lower tax family members, such as through a spousal loan or by contributing to a spousal RRSP. This can help reduce the overall tax burden. 2. Tax-advantaged accounts. Maximize contributions to tax-advantaged accounts like the Registered Retirement Savings Plan (RRSP), Tax-Free Savings Account (TFSA), and Registered Education Savings Plan (RESP). These accounts offer various tax benefits, such as tax-deferred growth, tax-free withdrawals, or tax credits. 3. Capital gains and losses. Strategically manage capital gains and losses by selling assets to offset gains with losses. This can help minimize taxable income and potentially reduce taxes owed. 4. Deductions and credits. Identify and claim all applicable deductions and tax credits, such as employment expenses, education expenses, medical expenses, and charitable donations. Keep proper records and documentation to support your claims. 5. Incorporation. For self-employed individuals or professionals, consider whether incorporating your business may offer tax advantages, such as accessing lower corporate tax rates and income splitting opportunities. 6. Estate planning. Consider strategies to minimize estate taxes, including the use of trusts, gifting, and estate freezing techniques. Review and update your will regularly to ensure your assets are distributed efficiently and tax effectively. 7. Tax-free investments. Research and invest in tax-efficient investment options, such as dividend-paying stocks, which may provide tax advantages over other types of investments. 8. RRSP contributions. Contribute to your RRSP to maximize the tax-deferred growth of your investments. Be mindful of annual contribution limits and consider carry-forward options if you haven't maximized your contributions in previous years. 9. Homeownership benefits. Take advantage of tax benefits related to homeownership, such as the First-Time Homebuyers Tax Credit (FTHB), Homebuyers Plan (HBP), and the Principal Residence Exemption. These programs can help reduce the costs associated with buying and selling a home and provide tax advantages for your principal residence. 10. Tax-efficient investments. Consider investing in tax-advantaged investment vehicles like mutual funds or exchange-traded funds (ETFs) that focus on tax-efficient strategies, such as minimizing taxable distributions and deferring capital gains. 11. Charitable donations. Make use of tax incentives for charitable donations by claiming the Charitable Donation Tax Credit. Keep track of all eligible donations and obtain proper receipts for tax purposes. 12. Small business deductions. If you own a small business, explore opportunities to claim deductions related to operating expenses, capital cost allowance (CCA) for equipment and assets, and the small business deduction (SBD) to benefit from lower corporate tax rates. 13. Scientific research and experimental development (SR&ED) tax credits. If your business engages in eligible research and development activities, consider applying for the SR&ED program, which offers tax credits to offset qualifying expenditures. 14. Tax loss harvesting. Utilize tax loss harvesting strategies by selling investments that have declined in value to offset capital gains. Be mindful of the superficial loss rules to ensure compliance. 15. Estate freezing. Talk to an estate planning professional about implementing an estate freezing strategy to reduce future tax liabilities on the transfer of assets to the next generation. 16. Business expense deductions. If you are self-employed or own a small business, ensure you properly track and document all eligible business expenses. This can include costs related to office space, equipment, travel, professional fees, and advertising, among others. Deducting these expenses can help reduce your taxable income. 17. Registered Disability Savings Plan (RDSP). Consider opening an RDSP if you or a family member is eligible for the disability tax credit. Contributions to the RDSP can grow tax-deferred, and withdrawals are treated as taxable income for the beneficiary, typically at a lower tax rate. 18. Tax-Free Savings Account (TFSA) strategies. Maximize your TFSA contributions each year to take advantage of tax-free investment growth and withdrawals. Consider using your TFSA to hold investments that generate higher returns or income that would otherwise be taxable. 19. Education-related tax breaks. Take advantage of tax credits and deductions available for post-secondary education expenses. This includes the tuition tax credit, education and textbook tax credits, and deductions for student loan interest. 20. Automobile expenses. If you use your vehicle for business purposes, keep track of your mileage and expenses. You may be eligible to deduct a portion of your vehicle expenses, such as maintenance, fuel, insurance, and leasing costs. 21. Tax-efficient withdrawal strategies. When you reach retirement, carefully plan your withdrawals from retirement accounts to optimize tax efficiency. This could involve considering a combination of taxable and tax-advantaged sources to manage your overall tax liability. 22. Home office expenses. If you work from home, you may be eligible to deduct certain home office expenses, such as a portion of your rent or mortgage interest, utilities, and maintenance costs. Ensure you meet the criteria set by the Canada Revenue Agency, CRA, to claim these deductions. 23. Income tax installments. Stay on top of your income tax installments to avoid penalties or interest charges if you are required to pay income tax in installments. Understand the payment schedule and make timely payments to avoid any negative tax implications. 24. Keep organized records. Maintain organized records of your income, expenses, and other relevant financial documents. This will facilitate smooth tax filing and help ensure accuracy in claiming deductions and credits. Airzol is a leading provider of comprehensive tax solutions. With our team of experienced professionals and cutting-edge technology, we offer efficient and accurate tax services to individuals and businesses alike. From tax planning and preparation to IRS issue resolution, we handle all aspects of taxes with precision and expertise. Our commitment to delivering personalized solutions tailored to each client's unique needs sets us apart. Contact us today at +1 647 232 7909 and discover how Airzol can streamline your tax process and help you achieve your financial goals.